Keys to the Commonwealth, a podcast where we share the real stories of local community members who are using real estate to build personal wealth, along with tips and tricks from professionals across the industry. And now, your host, Landry Fields.
All right, welcome back, everyone, to another episode of the Keys to the Commonwealth podcast. I am thrilled to be joined today by Mr. Bradley Flowers of Portal Insurance in Mobile, Alabama. Actually, don't normally, as you guys know, kind of focus on insurance ever, but I think it's kind of important that we kind of discuss a little bit of what's coming down the pipeline that we are hearing on our side. And rather than talk to myself on this podcast, I kind of wanted to get a friend of mine on here to kind of discuss some of the things just to be aware of, especially as investors. There's including myself, obviously, as you all know, investing in a lot of habitational places here in Kentucky. Insurance is definitely changing right now rapidly in our world as far as rates, things that we can do or things that we need to be aware of to kind of better prepare, especially from a financial standpoint for, our net operating incomes and things of that nature. So, but yeah, we'll jump right into it without further ado. Bradley, thanks for coming on the show, man.
Thanks for having me, Landry. I'm proudly from Mobile, Alabama. We are first in football, last in everything else. So, I proudly wear that stereotype.
That's true. We'll take first in basketball, though.
Hey, you guys are the bourbon capital of the world. So because of that, I'm looking to get to Kentucky as soon as I possibly
can.
Just
tell me when. You missed out on a heck of a tour I put on for the insurance conference there in Nashville. Have you probably heard of it now?
Yeah, I regret not going to that. I'm looking at, me and my family are going to Hendersonville, Tennessee, family and extended family, for a little trip in December. And I think the guys are going to sneak away and hit up Buffalo Trace.
Okay.
And Heaven Hill and a couple of those one day.
Yeah, just call me. I'll give you some secrets on how to get some stuff or possibly try to get some stuff. It's not, people think it's just easily accessible here. And honestly, I say it's even harder here because everyone in the state knows what they're hunting for as opposed to most other states.
Yeah.
Kind of deal. So.
Georgia is a sneaky, easy state.
Yes.
A lot of people get good stuff in Georgia.
Yes.
Nick Huber is a real estate guy that I follow on Twitter and have gone back and forth with a few times. And he's got a stellar bourbon collection.
Yeah, I think mine's way too. I've stopped. I've gotten better. I've got way too many bottles. I'm sure you would say the same as far as open. And
mine is a space problem. My wife is like,
exactly,
don't buy any more bourbon. I'm like, well, you're buying wine, and she's like, yeah, but you open a bottle of wine, it's gone in 2 days. You open a bottle of bourbon, it's gone in 2 years. Yeah, exactly. But yeah, I appreciate.
I had a secondary stash for all you listeners. I had a secondary stash of a lot of the backups of my bottles that I was like hiding from my kids, but they were in the basement hidden. And so my wife found them, and I had just never told her that that's where some of the extras were being stored. She's like, "You're hiding bourbon from me," type of a thing. Like, not really, but no, I'm coming down. So
my two backups are Old Weller Antique 107. I'm always going to have 2 or 3 backups of that.
Yep.
And then I'm always going to have 2 or 3 backups of Elijah Craig Toasted. Yep. And then I've got a bottle that I've been dying to open that I got at MSRP. It's Heaven Hill Heritage 20-year.
There you go.
Corn whiskey. I won in a lottery, and nice. I told my wife I was going to open it on my birthday, which is in a month. So
not even that special of an occasion, just any occasion, just kind of. So I've got one I'm waiting to open on some kind of very special occasion. Don't know what that is yet, but it's they only made about 2,000 of these bottles, and I happened to go over to Four Roses when they opened the new distillery visitor center.
Nice.
I was like, oh, maybe they'll do something. Apparently, I didn't realize it had gotten out that they were doing something. And I show up, and I'm like literally 900 something in line at 8:30 in the morning.
Wow.
And I'm like, is it worth it? I stick around, and it was worth it. But I have a barrel proof 20-year. Barrel proof Four Roses. Again,
that's awesome.
20 years. I'm assuming yours is not barrel proof. I've never heard of barrel proof at 20 years old type of scenario. Mm-hmm. So
that's crazy.
I got it in the back, and the problem was it came in a bottle that looks exactly like all the other bottles. So you wouldn't even know unless you looked at the label.
Yeah.
So
the one I'm after, man, there's one or two that I've been after for a while. I could talk about this all day. The E.H. Taylor Rye. I'm not a big rye guy, but I like the E.H. Taylor rye, and then the E.H. Taylor barrel proof. I'm after both of those.
Well, come up here. I've got a couple of barrel proofs. That's somehow I don't have a lot of them.
My favorite besides the Weller Antique is E.H. Taylor single barrel. And I know there's some variance between bottles because it's different barrels and that sort of thing.
Yeah.
But that's always been one of my favorites. But yeah, I mean, anytime, I talk a lot about business and marketing and running a team and that sort of thing. But anytime I can talk about insurance, obviously I'm game. And we do a lot of real estate investors.
Yep.
A lot in the Southeast, Alabama, Georgia, Mississippi, Tennessee is kind of our playground. And we do a lot of coastal business, which is a different animal in and of itself. That's kind of where we got started. So happy to talk about anything you want to talk about.
Yeah. I mean, so let's just dive into it. I mean, as far as, me and you are definitely aware of, but the way I've been kind of discussing it lately with a lot of people is that, the rates on real estate and just interest rates in general, at this point, or hopefully we're kind of thinking that they're about to peak or have peaked, hopefully, as they go with the idea. But what I've been really talking about with a lot of people is that, really, okay, yeah, you might be able to kind of breathe a little bit easier on that side of things, of feeling like the market's kind of settling there. But like the insurance market, it's just getting started on where those rates are going to be going because of the volume of claims, a lot of stuff. So obviously, that. Maybe speak to a little bit about some of the different, I usually kind of say 3 different ways that we're kind of being hit, primarily just from terms of different replacement cost scenarios, as well as amount of claims, and then the reinsurance cost, and maybe dive into what those are a little bit.
And then you have turnaround times too for quotes and stuff. I think the biggest advice I could give to any real estate investor right now is don't treat your insurance renewal or your insurance marketplace shopping haphazardly. Be very intentional with the agents and brokers that you work with. You're better off going to one. I would interview before. If I'm a real estate investor and you're looking at getting some quotes or working with some people, I would interview 2 or 3 agents before I did anything, because what happens right now is you getting good terms on your properties solely depend on the agent and the market they have access to, combined with how hard they want to work for you. That's really it. I mean, especially get this market that I'm in, coastal market, we all have the same markets. It's a question of, does that agent that you are working with, and by agent I mean the person that you're reaching out to. Some people use the term broker, some people use the term retail agent, some people use the term producer. That person's knowledge and willingness to help you is going to help you a ton. And an example I'll give, we have this conversation with almost all of our real estate investors. And I'm going to tell a story. So one of the first really big habitational accounts that we worked, the guy had been at 4 agents in 4 years. Okay. And Landry, that also means he's probably been with 4 brokers in 4 years, who is the middle person between us and the carrier. And that broker probably been with 4 different carriers in 4 years. Okay. He thought he was a big shot. I shop my insurance every year, and I sat him down and I was like, look, here's the deal. Okay. Your portfolio size, which wasn't massive if you look at like some of these guys on a national scale, but they had 250, 300 houses, 300 rooftops. There's only 2 or 3 people that are going to look at your account. If the same 2 or 3 people being carriers and underwriters, if the same 2 or 3 people are seeing your account every single year, okay, our margins only really work if you stay on a couple years. Okay. So what are they going to do by you going to a different carrier, different agent, different broker every single year? If they see it every year and it's shopped with everybody, they're going to give you a higher rate because they're going to make it worth their time.
Yeah.
That underwriter's commission too, in a lot of cases, right? They're not, or at the very least, they're not going to work as hard on your account. So you're effectively accomplishing the opposite of what you're trying to accomplish. So my advice to any real estate investor right now is I guess I'm going through everything, all the advice I had all at once, but make sure the agency that you're working with is equipped to handle your account and wants to actually work on your behalf. And by the way, Landry, that does not mean going to a big agency.
Yeah.
We have a conversation with a lot of people all the time because what we call getting outbigged, right? These big agencies come in and they say, oh, we're Jones Smith Johnson Incorporated. We wear pleated khaki pants and wingtip loafers. We've been here 800 years. But here's the problem. You're a number on a page to a lot of those bigger agencies.
100%.
You come to us, you're going to be in the top 20 accounts. We're going to treat you a lot better.
Yeah.
So make sure that the agency that you work with really knows what they're doing and really wants to work on your behalf. And the second thing is, my advice to anyone: if you get a renewal offer from the carrier that you're with, as long as it is reasonable and it is within what helps your P&L and your numbers and your NOI and all that good stuff work, I would probably stick with it.
Yeah.
The devil is better than the one you don't.
Yeah, there's a lot of advice there with that, and especially to the behemoth.
And I know a lot of that's very theoretical advice, but it all rings true.
Like, especially in the incorporated part. I mean, as you know, there's a little bit difference in coastal markets versus inner markets. With there's some carriers, obviously, it will never go to those coastal markets kind of scenario. And I've got one of those carriers that definitely allow me to walk into any room, even though if I'm the David, that they know I've still got as equal, if not a better chance in a lot of ways. If I want to write that particular line of business, that will get that thing done.
Here's what happens too. So I had a real estate investor reach out to me last week. Okay.
Yeah.
And he was buying storage units, and we do a little bit of storage units. We don't do a ton, but we do some storage units. And this is a typical scenario. He's in somewhere like Kentucky or Nebraska, somewhere, I think he was in the Midwest somewhere. No catastrophic exposure, really, right?
Sure.
So he reaches out and he's like, "Man, do you do wind insurance?" That's how it always starts. Do you do wind insurance? And I was like, yeah, we do. Unfortunately, we do. And he's like, "Well, I need help bad, man. I'm buying this storage unit. It was some ridiculous amount of money in earnest that he was going to lose. I've got this money up that I'm going to lose, and we can't get the insurance." And I was like, "Okay, well, who have you reached out to?" I've reached out to everybody, which is the worst thing you can do. The worst thing you can do. And
because me and you both know that the person that's calling desperate at like the last day is usually not going to work out, or there's something going on.
That's either going to be a home run or it's going to be a glorious waste of everybody's time.
Yeah.
So I actually had a bourbon, and I was like, I'm just going to tell this guy the truth.
Yeah.
And I said, "Here's what happened. Let me guess. You reached out to a local agent." He's like, "I did." I said, "Okay, so here's the deal. So you have with stuff like this is the excess and surplus market, right? Okay, you have your retail agent, who is the person you reach out to. Okay, they are reaching out to an MGA, which stands for Managing General Agency. They are an agency that serves agents. Okay, they are the in between us and the carrier. Okay, these MGAs are like Lowe's. Okay, so think of me.
This is the non-standard market we're talking about.
Correct, which is where all coastal stuff has to go.
Yeah,
and a lot of and more stuff, more inland is having to go that way as well.
That's going to be one of the effects of this.
There's going to be, in 5 years, there's going to be a lot more people that know about the specialty market than there are now.
Yeah.
On the consumer side and on the agency side. So I'm the general contractor you're going to build the wall. Okay. I'm going to go to Lowe's, and then Lowe's has all of these products I can buy, which are all of these carriers. Okay. So Lowe's,
a private Lowe's that the person's not allowed to go to, that we are.
Correct. Exactly. You can't. That's the first thing a lot of real estate investors think is, "Oh, I'll just go directly." Look, you can't do that.
Yeah.
So here's what happens: is these MGAs are massive. Okay. He went to RPS, which is one of the largest MGAs in the world. Okay.
Got one in our backyard here.
Yeah. Each of those RPSs has an underwriter that's specific to a region. Okay. Those underwriters, they know that market. They typically have one or two things they specialize in, or one area they specialize in. Okay, so he's going to RPS. They're huge. They have all the markets. They can do it, right? So he goes to RPS, okay? His underwriter is not well-versed in the coastal market. So his underwriter tries what he can try. And again, I'm telling this guy all this. The underwriter tries what he can try, and ultimately says, "Sorry, man, can't do it," because they don't know the carrier. They're going to carriers that would never dream, like you said, would never dream about coastal business. And then there are carriers that do that coastal business, but they don't know those carriers exist, because again, this organization's huge. They have thousands of carriers, right? So what happens is then you end up with me. I can put it with RPS, and my underwriter knows this market. But because you've already went to RPS, I'm blocked out.
Mm-hmm.
So I basically laid all this out to this guy.
Yeah.
And he actually received, I was like, he's either going to receive this pretty well or he's not. So my advice too, if you're a real estate investor in another area and you're going into a specialty market, whether it's California or Florida or coastal, Southeast, Gulf Coast or Eastern Seaboard, that sort of thing, I would make sure the agent you're talking to knows that market or has access to people who know that market.
Yeah, there's a lot of us.
That's a
obviously.
And I kind of went on a tangent there.
Yeah.
But there's a lot of people I think in areas more inland that are buying coastal business because like where we are compared to California, the real estate's pretty cheap.
Yeah. But at the same time, like I said, we always refer out for a lot of that coastal stuff because you're right. It's a totally different market. You got different carrier options. You got different underwriters. And so sure, something that's a state over that's still inland is one thing, but something that's down in Mobile or Florida, especially Florida, I'm not going to even touch that kind of scenario because I'm going to do a disservice to the client at that point.
For sure. And so, my advice too to a lot of people, I mean, this market it's crazy right now. Everybody to some degree is going to get rate increases. My advice to people is just do your best to ride it out. Make sure the people you're working with have your best interests at heart, but I would ride it out. Here's the thing, Landry, when we come, and I think you'll agree with me on this, when we come out the other side of this and things start to soften up a little bit, most of the carriers and underwriters they're going to look unfavorably towards clients that have bounced around during this hard market.
Yeah.
You know what I mean? I think you're
100%.
better off if you get something that you can still make work. Yeah, your ROI may be down a little bit. Your cash flow might be down a little bit. But if you can get an insurance renewal or a quote that you can, as long as you can make it work, I think you're much better off just sitting tight. And then you're actually going to get lower rates down the road.
Yeah. And most people don't realize, obviously, from a consumer standpoint, that for my listeners here, that like, there's a lot of times there's a question in regards to how long you've been with that carrier that they don't realize is 100%. Even on that part of it.
100%. Yeah. That loyalty matters. I'll tell you something else too that people need to look at. And this isn't much of a real estate investor problem as it is more of like the personal lines, auto and home side. But a lot of carriers are starting to lean more towards claims frequency rather than the amount that's paid out.
I have that conversation all the time with people. I'm like, they think it's about the quantity. I'm like, no, they're more not. I mean, there's still a point to the quantity, but at the end of the day, it's more about quantity, even if there's $0 claims that don't pay out. I was like, always have that call me. Let's always have that conversation up front because I don't want to do you a disservice by starting a bunch of stuff that ends up not paying out. And then that'll hurt you in the long run kind of scenario. But as far as the driving factors here, though, I mean, a lot of the questions, obviously, I discuss, answer, et cetera, what's driving all this and, want to see if you would add anything to it. But obviously the aspect of the frequency of claims, especially either auto is one thing, but especially from a as we in the insurance side of thing, catastrophic kind of scenario claims, which is, as you and I know, more not necessarily means it's a catastrophic from a death or anything else standpoint, but just the amount of people that are impacted in one instance, like a weather event or something like that. That frequency has obviously been driving up a lot. I mean,
look at what's going on in Hawaii right now.
Yeah. I mean, we're in Kentucky and we feel like we're kind of starting to get more of that tornado alley moving over more and more to the west side of scenarios with a lot of, like we had straight line winds that went across the strait earlier this year that I've never seen in my life type of scenario. Just nothing but straight line winds for 5 hours and giant pines that have been around for 100 years going down. And then you stack that on top of the fact that obviously replacement costs for anything as far as the rebuild between the labor, the material cost for anything has been skyrocketing. You got roofs now that are double the cost that they used to be 4 or 5 years ago. And then what most people don't understand or even aware of, which is the reinsurance cost, which I kind of usually define as think about your FDIC backing that the bank pays to ensure your money's still there. Same kind of thing with the carriers that they have to ensure that they're still there in case they default to make sure that the claims are paid out. And those costs have obviously risen quite drastically as well from the carrier side of things. So really everybody
I think the two big things are the reinsurance and the rebuild cost are really the two big things driving this. The reinsurance, essentially insurance for the insurance companies, you may work with a carrier that only deals with, Kentucky, Tennessee, and Ohio, but they're more than likely going to reinsure that has exposures globally. And that's why insurance agents, we see what's going on in Hawaii or when there's stuff in California or a hurricane here in Alabama or Florida, we know eventually it's going to trickle down and affect everybody to some degree if it's large enough.
Yeah.
And a few ways I think a real estate investor can look at saving a little bit of money. We advise every client of this. The first way, and this, I don't know if this is popular in Kentucky or not, but we see it a ton down here on the coast, are deductible buyback policies. It's essentially a policy that covers the deductible. So what you can do in a lot of cases is you can raise your, say, wind deductible to, say, 5%, right? Let's say you've got a $2 million total insured value, right? So 5% of that's going to be $100,000. Okay. Well, that may be more than what you want to pay. Well, then you can buy a separate policy that just covers that $100,000. Okay, it's called a deductible buyback policy. A lot of times the premium that you save by raising your deductible with your primary carrier plus the cost of the buyback deductible is actually more. So you can save a little bit that way.
Gotcha.
To help with some of the cost. And let's be honest, insurance carriers like high deductibles because it reduces claims. So that's a way that I think some people can look at it possibly lowering their cost. The other way that I talk about a good bit is looking at if your premium is financed with a premium finance company, and if you're a real estate investor, especially in the specialty market, your premium is probably financed if you're not paying it in full, getting favorable financing terms, working with an agency that's really close with a premium finance company that gives them favorable interest rates. We write a lot of accounts that, not a lot, but a decent amount of accounts that we actually move the real estate investor from one agency to us they keep their same policy, but they're paying thousands of dollars less because our premium finance company might charge 8% interest where they're paying 17 with somebody else.
Yeah.
Those are two little just tactical ways you can help the bottom line without actually swapping insurance.
Yeah, we don't really have much of the premium buyback options or scenarios here because honestly, they're still mostly replacement costs on roofs and everything else like that. That's obviously not is replacement cost on a roof even a thing in Alabama?
As long as it's not too old, 10 years newer, you can. Yeah,
everything's still like 20, 25 years here.
Yeah,
I'm afraid that's one of those things that I could see changing though. If we're talking about it, especially more in these non-coastal areas, is that we start to look a little bit more coastal. And what I'm getting at for those that don't understand this, is that usually there's a revision that they're at 50, especially in Kentucky or some of the Tennessee areas, like right now where we do a lot of our business. 15 years or 20 years is usually that cap where it might switch to an ACV policy, actual cash value on your roof or something like that. You got a prorated aspect, and it's not a full replacement cost. Some of my carriers are even still 25 and type of scenarios, even on replacement type of scenarios. But I definitely, and I think a lot of conversations I've had, you've had probably with other insurance agents, is that we definitely see probably the market start to shift, or even in our areas where that becomes more and more of a thing where, past 10 years, past 15 years, you don't get replacement costs. You're going to get a prorated actual cash value kind of cost analysis of your roof as far as, so if there is a claim, you're going to have the deductible, plus you're only going to be paid out for so much of that depreciated, which makes sense. I mean, if we're all thinking about it, no one's going to get a $20,000 car or, $20,000 car 15 years ago. It gets totaled and you're going to get the cost to buy a brand new car of that same make and model. Like that just doesn't happen. But yet that's what happens in the roof scenario right now from an insurance perspective kind of thing, which is
I could see in 10 years, a replacement cost on a roof doesn't exist.
I could see
that happening.
Or some kind of buyback program off the ACV scenario.
Right.
Exists somewhere, some places.
Every day that goes by, we're seeing more and more real estate investors just request ACV on everything.
Really?
And not even want replacement cost. Yeah. And we tend to try to push replacement costs to them if we can do it.
Yeah.
But yeah. We actually had one this morning. It was kind of funny. A sales meeting. One of my producers was like, hey, Miss Such and Such, they actually wanted the RCV, and we're like, whoa, like, it's because the price difference is so substantial, especially in a coastal market. There's a company called Sola, SOLA, that I'm not involved with or anything like that, and they actually do buyback policies for your area. And they are tornado buyback policies. So they are basically a deductible buyback, but specifically only for tornado damage, which is kind of interesting. Yeah. It's do a lot in North Alabama. We kind of have Tornado Alley there.
Yeah.
But But it's it's a changing market. A lot of real estate investors out there, man, they know more about insurance than the average bird, right?
Yeah. I've had conversations.
I think too,
Go ahead.
I think too, look at your account as if you are not you. You know what I mean? If you're a real estate investor, like look at your total insurance account as if you were someone trying to insure you. You know, take a step back. We had a customer recently that's one of these insurance is a scam guys.
Oh yeah.
And insurance sucks. Don't get me wrong. Like I tell people all the time, insurance sucks. That's why Portal exists. Like our goal is to make it suck less. There's always going to be things that insurance companies do stupid stuff. It's just the way it is. But this particular investor was like, man, I hate insurance. I hate you guys. Insurance is a scam. Da 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 da. This guy had paid us $600,000 in 3 years in premiums. Okay. We paid him out $1.4 million in claims. I'm like, did you double your money on any of your real estate investments? Like, because I guarantee you, he did not put $1.4 million in repairs in all of his properties.
Yeah.
That's my, and I'm like, so
exactly.
When we showed it to him that way, he's like, actually, you guys are pretty good. That's actually not, I was like, yeah, exactly. Like, I know it sucks. It's a necessary evil. You have to buy it. The way a lot of carriers force us to do business is very antiquated. Totally get it. In some respects, it's the good old boys club. But just look at your account, man. You know?
Yeah. No, totally get it. And so, I mean, to kind of wrap it up in that respect, you know, a lot of this has been good advice for people to be aware of, to try to, but a lot of it is going to be impacting people's NOI and, you know, your net operating income. So just be aware out there, guys, that and girls, that, you know, be prepared to kind of manage those increased costs, because one, that's going to affect the commercial real estate, because NOI directly affects your cap rate, and a cap rate directly affects your commercial real estate specifically. Maybe not your habitational kind of single family and duplex kind of things, but it's just something. It's not something to kind of be doom and gloom about, but really I just want to do this episode, really just say, hey, let's, be aware that this is a scenario that we're all dealing with. I deal with my rental properties and so forth, and it's something to be cautious on, especially when you don't want to get yourself into a bad deal on. There's going to be a lot of opportunity to acquire, I think, properties when people are trying to offload stuff, but don't bake into the cake something that doesn't make sense from an insurance perspective as far as the cost, based upon numbers or where things were this year or last year, type of thing. So
you buy commercial real estate yourself?
In 2 weeks, I'm closing on a this podcast will be out, but yeah, four fourplexes or three fourplexes, nice. 12 unit to add to our portfolio, nice. That we were gotten on. What did we get? We got seller financing with 5 years. Nice. 5 years interest only.
Nice.
Which was crazy. So don't ask me how we got that, but
what kind of magic wand? Yeah. So yeah. I don't think there's a better insurance agent for a real estate investor to deal with than someone who also buys real estate.
Yeah. I have a conversation all the time. I mean, I agree, because if you're in the woods, and that's why me and that, but a lot of times, you want those agents that know what they're doing and have more verticals. There's some value to the people who say, hey, I know this market. I'm an expert in this part of the market with insurance, kind of like the RPS thing you mentioned with the underwriters in the coastal areas. There's a lot of value to that, because they're obviously, since they're in it, are going to want to find the best options. What's the best coverage? What's the best carriers? What's the best way to structure this, as well as to save cost at the same time. And I totally agree with that. So,
yeah.
Hey, awesome. Look forward to you coming up to Kentucky sometime. Hit me up so we can get some bourbon. I'll tell you my secrets up here with that. And hopefully we'll run to you soon at one of the conferences or something like that. But don't want to take your time. Appreciate you coming on the show, man.
To learn more about this podcast, visit our page at keystothecommonwealth.com. To connect with Landry regarding insuring your investment portfolio, email Landry at novainsuranceGroup.com or call 859-687-2004.